All right, Target just reporting its earnings for the quarter came in at $2.98 a share on an adjusted earnings per share basis. That is much better than the street had been expecting, $2.42. Revenue also beating expectations, $31.9 billion versus the $31.83 billion the street had been looking for. Comp store sales down by 4.4%, but that was a little better than the street was looking for. Street estimate was down by 4.5%. And it looks like the fourth quarter gross margins were also pretty strong, 25.6%. The company is giving guidance for the full year, this full year that's coming on this, and says that for the full year, they're looking for comp store sales to be flat to up 2%. That's about in line with what the street was looking for. Adjusted earnings per share, they're looking for $8.60 to $9.60. $9.10 would be the midpoint on that. The street right now is at about $9.15. But it's going to take a difficult current quarter to get them to that point. They are looking for first quarter earnings per share of $1.70 to $2.10. The street was at the high end of that, $2.09. Comps, they're looking for down 3 to down 5%. And that's about in line with the street's expectations of down 3.6%. You see the stock is up pretty sharply, about 5.8%. Probably not just because the current quarter is better than expected, but because their operating margins and profit margins have gotten a lot better. They do say for 2023, that's one of the highlights that they point out. Operating income margin, 5.3%, was nearly 2 percentage points higher than it had been the year before. And their operating income dollars were up by about $2 billion compared with that. So, again, right now that stock is up by about 5.8%. The CEO, Brian Cornell, is going to be speaking to the street today, really laying out what they expect to see. That's happening at 9 a.m. Eastern time. But before that, Brian Cornell will join us right here on the Squawk Box set in an exclusive interview. That's coming up in about half an hour's time, 7 a.m. Eastern.
Huge stealth rally been going on. And the chart doesn't look a whole lot different than a Home Depot or a Lowe's or a lot of retailers. I mean, this stock, I don't know if we'll be able to see it. You can a little bit. That in October, November there, that's 102. 102. So if I can quickly tell you it's up about 50% or more in that time period. So, some people thought Target had, inventory issues or woke issue or whatever it was, but it still just moves like they all move in sync. And I think it was the chances of a recession diminishing for all the retailers, and suddenly there was a bid for all of them, really.
And the last time we heard from Brian Cornell, he talked about, I think in November, he was talking about how the consumer was really looking for value at that point. So we'll get to hear from him what's happening in the stores, what the consumer's looking for, and maybe how they've improved their margins to some extent, too, because I think that's an important part of the story over the last several months.
I guess the other important part, and we don't need to bring this up necessarily, but the high is, while Walmart has traded at a series of all-time highs in recent weeks, we're still talking about 260, and we're at 160. So it's come back a lot. It's come back a lot, but it's not in recent years.
With the inventory issues and then the problems that they ran into.
And there's some .com stuff in Canada. There's a lot of things over the last few years that Target has had to
And the big issue has been what happened during the pandemic, the surge in sales that they got. How do you make those sales profitable? And I think that's what they've been working on. So we'll hear more from the CEO. He'll be joining us in just about half hour's time.